So how would you describe your macro look, your outlook? And then could you also touch on how a new trader could be informed more about the macro in a simpler way?
You've got Trump coming in. Trump has a
Yeah.
number of policies, and the market is expecting certain things from him. So
Yeah.
really, it's bullish equities via lower regulation, bullish bond yields because it's pro growth, bullish crypto as we've all seen, and bullish USD because he's tariffing everyone, right?
Why do you think there is that cynicism that equities are overpriced, they have to come down? There's no predetermined destiny for where the market needs to go. But intraday, is a lot of the trading now that you've seen at the banks and the experience you've had, is it all digital, all algos? You know when someone is just so fucking smart that they don't even realize that they're that smart and they're like, everyone's this smart, right? No, no. Some of us are normal, right? And like, even that question about private equity, I think your question is very valid. Could you short it? Could you do whatever? Like, he's like, no, I'm just not going to own it. Duh. Right. So it's like, I totally know what you mean. What's up, traders? Welcome back to the Day Trading Show. Today, I'm sitting down with Colum Murphy. Colum is a trader. He works at a bank. We have to be very careful with what we say so he doesn't get in trouble with compliance at his job. But he had me on his podcast a couple of weeks ago, and I wanted to return the favor. I really liked his experience. I really like just the vibe that he brings to the podcast and the conversation. And hopefully, you guys will enjoy the questions I ask him. We go pretty deep in a couple of unique areas that you're probably not going to hear from many other guests on. So enjoy this conversation with Colm. Sponsors, thank you guys so much. And everybody, Happy New Year. Welcome to 2025. Hopefully, you're all going to make this the biggest year yet. I know I am. And I think together with you guys here, we're going to make 2025 the biggest year for the Day Trading Show as well. So make sure you're subscribed. Again, thank you to our sponsors. And now enjoy my conversation with the man himself, Mr. Colum Murphy. This episode wouldn't be possible without Top One Trader. They have a brand new instant funding model that I think everyone needs to try. There's 5 different accounts you can choose from. You can hold trades over the weekend, and there's a 90-10 profit split. So use my link in the description, use the code ASFX to save on your next instant funded challenge. And as always, thank you to Top One for being a sponsor of the podcast. Now let's get into the episode. Traders, welcome back to the show. Got a special guest in the building. So Colm and I just did about an hour and a half for your show. What was that, 2 weeks ago? And now I'm returning the favor. So we're going to dive deep today. We're going to talk about Colm's background. We're going to talk about how he got into trading. We're going to talk, I think, a little bit about the podcast. I'd like to hear about, your favorite guest and what you've heard of, from Garth or any of the other good guys you've had on the show. But first, Colm, it's good to have you, buddy. Thank you for doing this.
Yeah, thank you for having me. It's a real moment for me coming on this podcast. You have such a big viewing, and I am a fan of you too, so I really appreciate it.
It goes both ways, buddy. I mean it. So, yeah, this will be good. I normally like to introduce people at the beginning of the episode, and then we'll kind of get into some of the nitty gritty. So, for people that maybe haven't found our podcast that we did for your show or anything else that we've done together, and you've did the Garth interview, Garth McKenzie, who's been on my show before, tell everybody
Mhm.
a little bit about how you got into markets and how you got the podcast started.
Yeah, I mean, markets journey, it's kind of something I've always loved. When I was a teenager, it was the kind of guy that picked up Intelligent Investor and then doing night courses when I was in school. And we did talk about it a little bit on our podcast, but I think I didn't fully have the kind of courage at the time to pursue it. And it's kind of later on in life that, well, I guess through my career, I started working in the Federal Reserve, so central banking, then retail banking, then investment banking now today in London. So it's always been there, and being close to markets has always been there, but never my job. And I guess I started the podcast because it's a way of just expressing that curiosity and then still doing my own trading on the side as well. Yeah, so that takes me up to pretty much today when the podcast is semi-growing, and our session was our most recent one. And I think our shorts actually were my most successful shorts ever. So I think people really
They're
enjoyed
probably
them.
like, who's he interviewing? That homeless looking guy, you
No,
know?
it was how much you got so much into the short. I was like so much key points in one short. It was more than any of the other guests. So it was awesome. Yeah.
Thank you. Anybody that knows me, they know they either like me because I can talk that way and I talk fast and whatever. And then some people like he talks too. That was the comment, bro, that people used to write on my Instagram so much. He
Okay,
talks too fast. He talks too fast. It
really?
drove me nuts.
That's
But I
annoying.
was young, like when I started, I
Yeah.
was young. I mean, I still talk fast and I'm still kind of young, but like you got to understand where people are in the journey. Like I was just trying to get my name out there. So I'm running my mouth, you know what I mean? And now try to be a little bit more meticulous with what I say. No, it's funny. I do good, I think, on Zoom because when you're doing the Zoom podcasts, you have to give the other person space to finish the thought. You really can't cut them off that because it's awkward. But when you're in person, it gets easy to get excited. I get super excited. So in my in-person podcast, hundreds of people comment and tell me, stop talking over your guests, stop talking. And I'm like, I'm
Oh,
having a regular conversation with someone that I'm actually friends with. Like, leave me alone. It's how I
yeah.
talk. But when I'm on Zoom, I get a ton of comments like, thank you for giving your guests space to speak and space to answer. I'm like, to me, it's the same thing. So either way, that works out in your favor today that we're on Zoom for you and the audience. So, but I appreciate the compliment. I'm glad the shorts are doing good. Let's talk first about the podcast, and then maybe we'll backtrack to what you said about getting in with the Fed and getting into the investment banking. What spawned your inspiration for starting the podcast? Like, what are you trying to get out of it?
Well, I just wanted to learn, if I'm honest. I mean, I was
Good
on my
answer.
own trading journey for, I mean, I said it had started, but now with any consistency up until maybe about late COVID. You're talking about January 2022. Bought I guess maybe like many people, bought a kind of out of the box system or black box system, as some people call it. That was a trend following kind of options type thing, Um, was really shit at that. Like basically, it was a good system. Great guy, Simon Ree. I've had him on my podcast, super trader, but it really wasn't right for me. And then I went down the rabbit hole of ICT, SMC, and whatever, three-letter acronym was going to make me 10% in a day. Basically, that was kind of, you go off on these kind of, I call them side quests that are off the trodden
I
path.
like
And then
that. I like that.
yeah. And then you come back. I guess when you try and realize what you're doing, yeah, this is ridiculous, as in what I'm trying to do here doesn't make any sense. And then I started working, well, I guess fast forward, I lost probably 40% in that 2 years, which could have been a lot worse. The only reason I didn't lose more was because I stopped trading. And then I started, I started working with a mentor in February of this year. And really, he was an FX macro guy. And that was is my kind of thing. That's the thing I'm interested in. I'm not a great trend follower because I just naturally paranoid maybe. And when people say just follow the trend, I feels like I'm, sheep going to slaughter. I don't trust it. And the macro, and then I met Jason Shapiro, who talked a lot about, market reactions. And my whole process started, I guess the core of it is in what's the market narrative, what's the macro, and what's the market reaction. Those three things together are kind of the key for me. And that's when I started having success up to my only profitable quarter or profitable last 6 months just closed. So,
Love that. Why do you think the podcast has been such a learning tool for you? And why are you so quick to adapt to what these people say? Oh, Jason says do this and you just do it. Like why do you think that becomes so smooth? Because there's a lot of content out there already about trading that you could have listened to, right? So there's a difference. Now you're talking to the person and asking the questions. That's one thing. But then also it's like Jason and all these other guys, he's in the New Market Wizards book. Their story's been out there. It's not like they said maybe anything groundbreaking, maybe one or two things, but like why do you think it's connected with you so much and resonated with you so much?
great question. Um, I think beliefs are part of it. When I meet someone and study them as a guest, study what they've done or achieved, um, and then they tell me stuff, I'm more likely to take it and internalize it. But my dad could have told me all of these things, and they would have been true for him, but I wouldn't have believed them. So I guess when I'm involved and taking it seriously, it's something that, and I feel like an audio type learner. I learn, and I'm also a little bit of a slow learner. Like I did well in education and general career as a kind of textbook or exam type person. But when it comes to learning and just going through things, hearing it once, hearing it twice, and then taking it away and doing your own, I guess, kind of like a scientist trying to put it together. Does it fit? Can it add anything? Like I'll
Sure.
never take something at face value and just say, okay, but just because Jason Shapiro says it, I'm going to do it. Like his positioning data, for example, is a big thing he uses. For me, trading FX futures positioning is not everything, right? Because the FX flows and volume just goes through on the FX side. So futures is only one part of it. But for me, so that didn't necessarily fit, although it's a nice indication for equities. But the market reaction I found very useful, and then when I combine that with, say, ranges, if we're watching the 10-year yield and we're at upper end of a range, we get strong non-farm payroll data, we push up, we close down below the range. That's, something that should be happening that's not happening via the market reaction. On the macro side, yeah, it's gone up a little bit, but it's a little bit hairy. But when you just wait and see what happens at end of day, that was the real thing I took for him. But I mean, just to sum up, probably beliefs. And I think not taking everything they have, because if you did, you'd just be, chopping systems and that is equally unsuccessful. But kind of at least being open to new ideas and then having your own core process and saying, can I add this on? Will it give me more of an edge? Can I backtest it? Can I soft launch it with, 0.1% risk for 2 to 3 weeks? And then see what the data is like compared to my previous system. Is it worthwhile? So those
I
two
love
things I
that.
think were important.
I love
Yeah.
that. I think that's a great answer. What do you look back on the podcast and think like, oh, I should have asked that guy this, or I should have asked this guy about this one thing that he did. I think I would have gotten. Do you have any like regrets about someone that you would like you want to get him back on the show and talk to them more?
Mm. I'd like to get you back on the show, I think,
I knew
to
you were going to say
give.
that. Don't say that.
Yeah, yeah. No,
We
no,
could
you're
do
not the
us
only one.
anytime. Okay,
You're
give
not
me
the
somebody
only one.
else.
But
Give me somebody else.
I think one thing I would love to do is get people back, and say Jason Sen is one. You've just seen him on the Words of Wisdom podcast. He's the most recent guest on a masterclass. So I think everyone has their thing, and for me, people don't really know their own things for a while. It's kind of a journey to figure out what things are. And I talk about my journey and taking things from other people and putting together in my own way. I would like to get you back on VWAP. I'd like to get him back on how he does technical analysis and uses, say, Fibonacci, because Fibonacci is not something I use. Bait Nussbaumer was my first guest and my mentor. I'd like to get him back on how to interpret market narrative and market reactions. So I'd like to put together something that brings a guest back and gives them their spotlight on what's key for them. And
That's a great
then,
idea.
and not everyone, but the people that I think can string together
The
enough
core.
concepts that's, yeah, something free for someone that says, okay, these guys are legit. Here's what they do. And hopefully they'll agree to come back, right? So,
I think they will.
but yeah.
What about a not a least favorite guest, because that's not a question either of us would really want to answer. But do you
Hmm.
ever like, I think people wonder maybe sometimes when we host these podcasts and we're talking to traders, do you ever get to a point, have you had one yet where you're sitting there talking to somebody and you're like, I am not interested in what you're talking about. I'm ready to wrap this thing up. Have you had that yet? Real quick, before we go any further with today's podcast, I want to thank our second sponsor, Edgeful. Edgeful is the only tool you need to reach your trading goals. This is the one-stop shop. If you're trading stocks, futures, or crypto, you can go into Edgeful and gather all the information you need to refine your edge. Whether it's the report on how often the gap fills or the report on how often we make a new high of day in Power Hour, all of those answers are given to you and updated daily in Edgeful. So use the link down below, check out Edgeful. This could be a tool that changes 2025 for you. So I'm being serious. This is definitely worth your time. And if you want to see us use it, come check out ASFX TV. But I got an Edgeful link in the description. Definitely go check that out. And of course, thank you to them for being a sponsor. Now let's get back to the video.
No, 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 I haven't. And I'll say that because I'm super selfish with my podcast. As much as, I work with a guy, he's a friend of mine, he's a big podcast, he's kind of helping me coach, for free. And just because we used to live together in Dublin, and he's talking about, this is the niche. Maybe you should get this person that's not being fed in the market on YouTube, and this
And you're
keyword
like,
isn't being
fuck all
hit.
that.
I'm like, I don't give a fuck. I'm like, I want to see this person because he's talking about that. I would say I've had I've had challenging guests from my perspective, and I mean that as in they just know so much, and I'm breaking it for lack of a better phrase. Like I'm worried. Like say, I'll give you an example. Spencer Hikimian, who is a hedge fund manager. Now he manages probably plus $100 million in New York-based hedge fund. Super, super smart guy. He's 2 years younger than me as well. So it's
Whoa,
like super intimidating. So, but he is so grounded in history. What happened? What was the regime in the 70s? What were the financial conditions? How did it impact assets? That's how he invests. He's a
interesting.
regime guy. Yeah, which is just not dissimilar to narratives. The Trump narrative. What's that going to drive? Higher equities, higher bond yields, higher USD. That type of kind of stuff informs him. And I'd ask questions and I'd feel like a right dumbass after I've asked him because he just comes back. I think to give you, I guess, a specific example, he was saying private equity is heading for difficulty. Why? Because they got cheap money way back when. Rates are up now, and these guys are sitting on loans that are significantly subpar their original value. And then I would say something like, "Oh, how are you going to express your view of, private credit not being a good investment?" He was like, "I just won't own private credit." And I was like, "Fuck." I was like,
Fuck. Okay.
"Fuck."
Right.
Yeah,
No, I totally know
yeah.
what you mean. Do you know who Chris Cady is?
No.
Okay, so he's like an old school futures trader. He still trades in New York. Very smart guy. Like he's one of those guys you talk to. You can tell just like a wealth of knowledge to the point where he's like over the top in my like not in my head, but I think in even in general. If you go to his Twitter page, I tweeted him all the time because he tweets these things that I know are valuable, but they're like cryptic messages that's like
Mm,
his lingo and language of just so many years of talking to traders and being on the floor and working at the bank or wherever he worked, right? The firm that he traded for, that it just goes over my head. And I'm like, Chris, give me more. Like I don't follow that, you know? And
yeah.
I find that like it's almost like it's like a when someone is just so fucking smart that they don't even realize that they're that smart and they're like, everyone's this smart, right? No, no. Some of us are
Yeah.
normal, right? And like even that question about private equity, I think your question is very valid. Could you short
Yeah.
it? Could you do whatever? Like he's like, no, I'm just not going to
Yeah.
own it. Duh. Right. So it's like I totally know what you mean. Like sometimes these guys they are, but you know what's so interesting? They are like in some ways difficult to communicate with, but it challenges us as the interviewer to like ask good questions. Just put a question out there that's good and then shut up and see what he says. And that's where it
Mm,
gets good. So that's where I found challenges. I'll tell you a quick thing. I had a guy on the show once. It's only happened once. I had one actually that was really awkward in the beginning. I'll tell you that one too. I got some funny. I mean, bro, I'm at 100 and let's see, what episode are you going to be? I think you're like 160.
oh
Yeah,
well,
you're
very
160.
good.
And I mean, I've done more before that. So I had one guy, we're like 10 minutes in, and he's talking to me about trading the Dow US 30. And I'm like, this guy
Mm,
doesn't make money. He thinks he knows how to trade. Like he tells his
yeah.
friends he trades and he posts pictures with his cool car. He's not trading. He's not a full-time trader. I could tell. The firm that guy worked with called me a few weeks later and was like, hey, he doesn't work for us anymore. You can't post that episode because they were actually paying me for sponsorship of the podcast at the time. They were like, he just got fired. We fired him. We kicked him to the curb. So I was like, oh, my radar was going off on that one. And then I had
Yeah.
another one with a futures guy while I was trading Forex. So it was already contentious right there. That at the beginning of the episode, and I like Aaron. So like Aaron, if he even ever hears this, it's okay. He goes, I said something about like, oh, so you and your girl are like traveling still. Where are you going next? And he's like, yeah, we actually just broke up. You should do more research on your guests. And I was like,
Oh.
okay, great start to the episode because I didn't know you and your girlfriend broke up. It's my fault. I didn't ask you that before. Like, God, I was just being polite. And then he literally says, "Oh, we could crack that can of worms open if you want to." And in my head, I'm like, "What the fuck?" But then I smile and go, "No, thank
Oh.
you. This is the day trading show, buddy. We're going to talk about day trading." So yeah, so
Yeah.
you'll have those, bro. The more you do them, you're
Oh
back.
my
Even though,
God.
like, I've tried to do the same thing. I never. People hit me up all the time. Hey, can you interview the CEO of this? If I don't want to, I don't do it. And I
Mm,
don't take money from people to come on the show. So it's got to, I'm like you in that sense, but I still will push myself sometimes to try, oh, this guy's on Twitter and I don't know him, but he's doing well. Let's see what's up. And that can be cool. But then sometimes it's not. And it's like, all right,
yeah.
cool. Let's see what we can get out of this, you know? So yeah, but it is rewarding, I think, more than not. More times than like I've
Mm,
had Brian Shannon on. He's the guy you gotta have for the VWAP. I'm like the junior Brian Shannon. You need him. He's the GOAT. Anthony Crudelli, some of these older school, those guys, anything they say, I just, yeah, whatever you want. Yeah, I'll say, yeah, yeah. Keep
yeah.
talking, please. You know what I'm saying?
Yeah, yeah. Yeah, I'd love to have him on, especially because I'm so uneducated in the area. But I would say what was the giveaway when you realized that guy that was trading the Dow may not have been profitable or wasn't
You
profitable or
ask
was
them about risk reward. You ask them about how you managing this trade. There's no system. He's just taking trade. Well, if I make my money in 15 minutes, I'm done for the day. I understand that, but like, what are you
right?
doing? Like, how do you know to
Yeah.
be long or short?
Mm.
Like, are you using
What's the
market
process?
profile or using volume? What asset do you trade? Like, he was just like, yeah, I look at the Dow. Sometimes I'll look at NASDAQ. Whatever one's moving more, I'll trade that one. I'm like, okay, that's basically never even a question that I ask myself. And I think I'm a pretty serious trader. I'm going to
Mm.
trade one of two indices because one is moving more. Like you see what I'm saying? Just certain little
Mm.
wordage that I would never use were giving me tells. When I asked him, like, okay, if this trade was to win, because we were doing screen share, I was like, if this was a winning trade, how would you manage this trade? He had no good answer. He's like, well, I'll feel it. Feel is a part of it
Oh,
for
yeah.
discretionary traders, like we talked about.
Mm.
But it's not everything. You have to have a system, like a foundation to then apply discretion onto. But when someone is fully discretionary, he might have made money that month or that year or that week, but that's not a real trader. You know what I'm saying?
Mm. Yeah, 100%. Because I think, and I heard Brent Donnelly say it, who's a big FX trader. He said something like, "When I've actively got risk on the table." Now, I didn't have him on my podcast. Sorry, I just read his book. And he was like, when you're looking at something you've got risk on, and you're watching the chart, he's like, "I'm convinced that your IQ drops, 50 points because having risk on without a system or a process is essentially hitting your primate brain, which just wants to get out anyway. So that feel isn't even feel, it's
Great point.
panic. And yeah, and
Great point.
you can't logically, you can't logically get the most out of it, or you're just gonna basically you're gonna probably exit the worst time possible, and then so
Exactly. Do you have any people that you're already like lined up for that you want to get on the show? Any big names for 2025?
yeah, I'd like to Nick Leeson, I'd like to get on,
Legend.
because
Legend.
because he well, it's fine. I was a little bit nervous because I work for a bank and he took down a bank, so I was like, should I, shouldn't
That's a
I?
sick
But
podcast. There's a good title
yeah.
in there somewhere, bro.
Yeah, yeah, don't take down my bank. Exactly. Yeah, yeah. So, but it was Jason Sen who texted me saying, I don't know, around Christmas time, say, oh, would you like to speak to Nick Leeson? I can make a connectee. And I was like, yeah, of course I would. Just from the story perspective as well. And he does actively trade, so sure, I want to talk about that. But the guys that have done the distance, I guess there's kind of nothing that surprises them. They've been there and seen it all. And some of the stuff they've seen would be shocking to a normal listener, but to them, it's just another fucking Tuesday, that kind of thing. It's like they've been through all of the ups and downs. So I love those kind of guests. And a couple of the first life pit traders that I'd like to get on. And then there's one, I haven't reached out to him yet, Jens Nordvig. And
Another
I
guy.
didn't want to offend. Yeah, he's ex chief economist from Goldman, but I he's kind of like, I don't want to offend economists now, but he's kind of like the only economist that I see traders listen to. Two big FX traders I follow. Um, so just from that perspective, I'd like to hear about him. And he's written books. I feel like guys that have written books, they're really interesting and shit. They can
Yeah, because
talk
to
really
write a
well. And
book, I had
yeah.
a call with a publishing house a week, not a week ago, a couple of months ago,
Oh
and we were
wow.
looking at publishing a book. Yeah, and it's they want to make sure you can not only sell the book, they were very big on like knowing my social media reach and my email list and everything, but they were also very
Okay.
big on like you got to fill this thing with really good stories or really good value. It's one of the two. It's got to be valuable
Mm,
like a textbook, or they wanted it to be stories that people would talk about. And I'm
yeah.
29, so I don't have all of those stories yet. You know what I'm saying?
Mm,
Um,
yeah. Yeah.
I actually just that
But
book right there, the prop trading secrets. Have you seen that?
mhm.
That just came out.
No, I've never seen the book, but I can see it on screen.
So I'm in the book. They
Oh,
audited
what?
my trading records. I'm in the book. Nick Trader Nick is a guy from Atlanta. He's in the book. Um, Etienne
Awesome.
Creed wrote that book, and he's an automated trader, and he's interviewed some big hedge fund guys in that book as well. So I think there's like a
Oh,
world of people that are not on Instagram and doing Lambos and doing all that are really into markets. Like the guys that you mentioned just now, I think some of the
mm,
guys in that book, those are the people that they often do have those stories, but they're kind of shy sometimes to share them.
yeah.
You got to get to know them, get them to crack the egg open a little bit, and then they'll tell you everything. You know what I mean?
Mm.
What's up, guys? Before we keep going, a quick sponsorship shout out to TradeZella. They've been a sponsor for months now, and instead of just offering one discount code on your monthly membership, they've decided to kick the door down and offer you a 20% discount if you sign up for the year. So use the link down in the description. The code is ASFX20. That's going to save you 20% on your yearly membership, and that's going to give you everything you need so you can actually start making money this year. If you want 2024 into 2025 to be your most profitable year ever, you're going to have to track your trades. You're going to have to track your good ones and your bad ones, and you're going to want to learn from those bad ones by studying the data behind them. What days are you making the most money? What times of day are you making the most money? What assets are you trading best on? What are you doing with your winners? Are you holding them long enough? What about your losers? All of that is answered for you with TradeZella. So use the link and the codes down in the description. Thank you to TradeZella. Appreciate y'all. Love you, Umar. Now let's get back to the episode.
No, 100%. And it's sometimes it's hard to be heard in a world full of such good lifestyle marketers. They're super. I mean, I cannot fault some of these guys. And my friend had one of them on his podcast. I want to say it's Alex.
Yeah.
Do you know this guy?
Yeah.
He had like my friend sent me an Instagram story from him was like he had put Christmas lights on a Bugatti.
Yep.
You know, I don't know anything about marketing. I suck at marketing. I also suck at sales. So maybe I'll need some help on sales side and stuff because eventually you have to sell something, right? But I see these guys, I'm like, yeah, there's loads of people that are legit that no one's ever heard of. But you know, this guy with, Santa lights on his Bugatti. Why? Because it's got, I don't know, 100,000 likes or views or whatever. And he's huge on Twitter. And it's hard for those legit guys. I think Trader Nick strikes me as someone that is quite sensible and back tested, as someone that would be worth talking to, I think.
His chapter in the book is how I made $3 million trading Forex in 2023, something like that.
Wow.
Definitely sensible. Definitely sensible.
Hmm.
He's a normal guy. He's got a wife. They have a house. They go on vacations. Like he's like me, like lives a normal life and has a business about trade. No Bugatti. No, my
Yeah.
brother said something to me. He came over for Christmas the other day. My younger brother, he works in a bank as well. He actually just got a job at private equity. He worked at Raymond James and now he's with private equity firm in Tampa.
Oh, wow. Very
And he
good.
sees a McLaren, the Senna, whatever. I don't know cars like that. And he's like, "Oh, bro, they got McLarens out here where you live. I didn't know there was money out here like that." Like just being funny. And I told him when he
Hmm.
came, we were sitting in my sauna in my garage, and I said to him, I was like,
Oh,
"Bro,
nice.
just so you know, to own a house out here, you had to think, do I want the McLaren or do I want the house? Which one do I want?
Hmm.
Which one's more important? Do I want money in the bank or you know what I mean? So just because that guy has a
Yeah.
McLaren, don't think the rest of us couldn't get a McLaren, but we have to be adults and make real grown-up decisions. Like I want my kid to go to private school versus me have
Hmm.
a fancy sports car. Like I have priorities. So I think
Yeah.
the marketing stuff, it's very attractive. It's what they see on social media. But like you said, there's real wealthy people out here that couldn't give a fuck about what car they drive, bro. And that's who I've always
Hmm.
wanted to model. And I think that's because that's who my dad was. You know, same thing for my brother. My brother just finally got a nice car. We were riding him for so long to finally upgrade his car. So like my dad raised us really well to kind of not get sucked into that, which is, and I also like I don't market my business that way at all. You know what I mean? So I think
Yeah.
but then look at who I attract on my show. Guys like you, guys like Brian Shannon, like the real legit people. That's who I'd rather talk to. So I think you might think you suck at sales and marketing, bro, but I can tell you, you don't. I know that your humility and your approachability is a marketing tactic. The fact that you're
Hmm.
forthcoming and very honest and very upfront, that is a marketing tactic that people with a brain can say, oh, I kind of like this guy. He's a normal dude. Versus as soon as people see the Lambo with the Christmas lights, yes, they're going to click on it. Yes, they're going to look. They don't trust that guy, bro. You know what that guy did,
Yeah.
Alex? He painted him on his chest. Do you know about this?
Oh, yes, I've seen that. Yeah, that's
Yeah.
right.
Yeah.
Yeah.
So like we don't need to give him the clout, but that's what, if that's what you need to do to get attention, like that's pretty crazy. You know what I mean? I don't want my son
Hmm.
to see that. That's just all. We can leave it at that. You know what I'm saying?
Yeah. Yeah. I think the frame you take as well, I don't know, maybe anti-guru is the right, and maybe it's the
Yes.
wrong word, but you know what I mean?
Yes.
The kind of just pitching yourself as a normal guy that's
Normal guy.
trying, just we're all going through the same kind of shit, and we're not these
Wait,
crazy kind of
Colm, wait.
messianic
You didn't
characters.
turn $1 into 10 million?
It's like,
You're
yeah,
crazy. That's crazy. I can't
yeah, yeah.
trust you. Like that's what's going
Mm,
on in some sense. So it's unfortunate for new traders. New traders get sucked into that stuff, right? And then they
100%.
associate all of that with trading. When in reality, like you are really coming through it on your own here. You're starting to see trading is hard. I struggled for 3 years, like I told you when we did like trading is
Yeah.
hard. To lie about that and make it seem like it's this, you're actually disservicing people. because they're going to create a
Mm.
reality in their head that makes them think, oh, I should figure this out pretty quickly. No, honestly, you probably won't. If you make money year
Yeah.
one, you're an anomaly. Yeah.
Yeah. And likely quite lucky.
Yeah.
Yeah. But I think like a friend of mine sent me a book, the Alex Hermosi book. I don't know if you've seen
He's the
this.
best. Yes.
Yeah, he's apparently a super sales guy, and obviously he's big online. But he has that formula, and I think
Yep.
the difficulty part of that formula when you try and make that difficulty look as easy as possible, and I can't disagree with it, but it's hard in trading because especially if you've gone through it, it's like, man, you're in for it here for a year and a half, 2 years, right? If you stick to it. And if you start dropping off, it might take longer. So
Yep. Yep.
yeah, it's hard to pitch it, as
It is.
simple and easy. And when I hear it, my back immediately goes up. And I think I'm suspecting that people are a bit tired of that type of narrative, the
I
gurus, the
think they
kind
are.
of
I think in general,
marketing.
like people, I think that that actually comes as like a byproduct of distrust in even mainstream media. Like people don't believe
Mm,
anything that's skeptical anymore. I feel like, and especially the outlandish stuff. People are very quick to be like, yeah, it's bullshit. It's probably bullshit. So now like that
yeah.
marketing stuff is going away where I think guys like you and me that just be ourselves, be authentic. You're going to push some people away, but some people are going to love you. That's what's going to last. So I think that's why I was a big fan of your show and the content that you did. Let's go. It made me think of an important question though. When you were
I
working at
appreciate
the
that.
bank and you were or working at the Fed and transitioning into the bank, what were you
Mhm.
doing before? Were you in university
Yeah.
around other kids talking about finance and then you were like, yo, screw this, I'm going to get a job? Like what was the thought process for you of like how to get into finance?
So my degree was a kind of business IT degree. And so
Got
the
it.
route, I mean, what I did for the Fed was worked on in their kind of emerging technologies department as an analyst. So
Okay.
looking heavily at cryptocurrency,
Hmm.
how central banks can do central bank digital currencies, things like that. And that was very much a 6 month thing. We used to call it a placement program. And then you go back to university, do your final year degrees. Then I started in a consulting firm and was leased to the Irish banks, where I worked kind of in finance, but more finance data. So I've always been on the IT side of banks, right? So never, but yeah, it was kind of my way of sticking towards the banking markets type world. It was like, yes, my what I do for work is IT delivery or data focused, but the subject matter is always in markets and what we're trading and risk and finance, etc. So, yeah, that's kind of I just got in it via grad role. I guess to answer your question directly
That's
is,
cool. We have the same thing. They
yeah,
call it a co-op here. A lot of the schools
mm,
will call it a co-op. Oh, you'll work a little bit your last year, get some credits, stuff like that, and then go back and finish or whatever. So we have, I think, universities, at least back in my day, they had something like that. What was the
yeah.
favorite of the jobs you bounced to, and then the consulting you did? What was your favorite role?
I think in my current job, I had what's called an agile lead role, which was basically running the IT delivery for an area in the bank. Um, And that was I thought that was great, like, because just from the engaging with the business side of things, understanding what they want to do, understanding where they're coming from and what the regulators are saying, and then working with the developers on how to build it and what we should build and testing it and things like that. Just quite, first experience having your own team, and just being a little bit flat out. I think, and what I mean by flat out is you're a little bit under pressure. Things need to
Hmm.
kind of happen quickly. And
Hmm.
I think that brings a lot of growth with it, although it's a little bit stressful, a little bit of
Absolutely.
pressure. Yeah, I think it was
What
good
were the
that way.
hours like?
Okay.
Yeah.
They were, I think, on regular.
Yeah.
They weren't anything crazy.
Okay.
I do remember when I worked before I got to London, being in there with I'm not going to name, I won't mention his name, but someone I was working with, who was someone who worked for the bank, and we'd be in there 1 o'clock in the morning the night before this thing had to be submitted and stuff like that. Yeah, reflect on. And if it was consistent, I think in any job, if you're consistently working till 1 o'clock in the morning, you've got an expiry date. So
Yeah.
for me, luckily, the bank I work for is quite good work-life balance, despite what you hear about banks. I think it depends where you sit in the bank. If you
Of
sit in an
course.
IT function, yeah, and you've a good culture, which is really important, I think, if you work somewhere, um, yeah, you should be all right.
Did you have to work remote during COVID a lot?
I actually Yeah, we did. Sorry, we did. I was going to say because I transitioned to London, I was also working from home initially because no one was in the office, so it
But
was a little bit
now back
tricky.
in the office now.
Pretty much, yeah. There's a
Yeah.
big drive to get people back in.
Can you
Yeah,
believe they still let here in America, the number changes who depending on who you ask, but they're saying like 60% of government employees in America don't go to work more than 3 days a week. Like they go to work 2 days a week or one day a week. Isn't that crazy still? And we're paying
into
for
the
that
office.
into the office.
All
And
right, and
at home they're dicking around. They'll find a way to dick around always. Oh, they checked my
yeah.
monitor. I saw a dude put something on the mouse and he had the fan spinning, so the mouse kept moving. Like people will
Oh
always find a
yeah.
way to screw you over. So we have a big problem with that. I think people are starting to be forced almost to get back, and I think when Trump comes in, he's going to make people go back or get fired, kind of thing. But I think
Mm,
being at a bank is probably one of, in my opinion, because I worked at, like, at T3, at a prop firm, same kind of vibe. When you work on a floor in finance, when you work with people in finance, that energy, like that vibrational energy, New York, London, finance energy is fun, isn't it?
mhm.
Like high
Yeah, yeah.
energy, high stress kind of, but it's fun. So do you ever think you'll pivot into full-time trading, but then try to open your own office since you know about that? Because I know you like that. Was that where you want to
Mhm.
take this? Like, what does it look like for you going forward after? Of course, the podcast, but what else?
Mm. Yeah, I'd love to try trading on my own with the podcast for see how it goes.
Yeah.
I mean, it could go for 6 months and then I would go back to find a role, but it's definitely something I'd be open to trying. As of now, yeah, I've got quite a good role, work with good people, so I'm in no massive rush. But if the opportunity came up, yeah, I'd love to
And
try it. I
trading's
mean, if
lonely.
100%, I'd need, yeah, I'd need to ramp up the podcast. I'd need to become more of a content, push out more content and start maybe a community of people that are interested in the kind of things that I'm interested in. Because when I'm trading, I'm always like to be informed about what's kind of really driving markets. I'm not a very I'm a kind of firm believer that the market is just a kind of auction reacting to news all the time. And I think you need to know what news it's reacting to, what's kind of driving it. So I like that part of always kind of being in the know about the news and what's happening in the world of markets or in politics or whatever. Um, and so that, yeah, I guess that would kind of keep me
Oh yeah.
LinkedIn and maybe hopefully not too lonely.
So let me ask you
But yeah.
this: Do you think when you hear people talk about algorithms run the market, with your experience, is that what is moving the market? Yeah, I understand. Like, I agree with you that there's no predetermined destiny for where the market needs to go. But intraday, is a lot of the trading now that you've seen at the banks and the experience you've had, is it all digital, all algos?
See, I sit somewhere, if I could talk about my previous job. I sat somewhere really where I don't see that. Now, if I'm sure people know the rise of electronic trading in banks as market makers. So predominantly, you don't have as many FX spot traders sitting in a bank. You have a fraction of that amount of people, right? So, um, but yeah, so yes, the market making is much more electronic. But at the same time, the way I view markets and specific asset classes reacting is, you just imagine there is, hundreds of billions of dollars of risk around the world, right, that needs to be managed. So you have massive stakeholders, could be hedge funds or whomever that have risk in certain places. And when you have events, the risk dynamic for that money will change. So if you have conflict in the Middle East, for example, and you're expecting oil prices to be bid, that's going to have an impact on someone, say that might be short oil,
Absolutely.
and yeah, and people are going to start kind of moving there. Or if you have risk in Europe, like recently we had the French government topple, you're going to see bond yields higher and you're going to see euro dollar lower. Or so you should see them. Maybe you won't see them, but you should see them. So it's like that's how I see it. I don't see it as an algorithm. I don't see it as an overlord or anything like that. I see it like news and
Something
events.
happens and then there's a response, and that response just happens to be facilitated by algos more than it used to be. That's what you're saying.
Yeah, absolutely. Someone has to match a buyer and a seller. Does
Yeah.
that mean there's an edge in that? I don't think so. personally, I don't think it can be decrypted because if I think if it could be, there's people that spend so much time on this. There's people that spend 16 hours a day focused
It's already
only
been
on this.
solved. Yeah.
Exactly. And then someone would have a perfect, basically linear P&L just going
Right.
directly up because they know they've cracked the code or whatever. So I think that element of that of randomness, or if it's volatility when the algos are turned on in places that I don't read into it as much as that. I think when I hear about the stories around it, it's as if I put a chart in front of you and asked you to come up with some kind of story. If you're in an echo chamber, you're going to come up with a good narrative about, oh, this guy is doing this, and in reality, it's only retail traders that talk about this stuff, As in, no, I like my and I hate to ramble now, but this is my last
No,
point on
please.
it.
Yeah, no, please.
My mentor is, the 40-year former FX spot trader in all of the biggest investment banks in the world, right? We have had probably 15 to 20 one-to-ones, some of which are over 2 hours. We don't, he was a market maker, right? And he traded prop when the investment banks could trade prop. We didn't spend any time talking about running stops and creating volatility to take out retail traders, right? And that for me was the final straw that said, this is not it. You know what I mean? And I also, even if it was it, I wouldn't like to live in that world. Like the world I like to live in trading is, what's happening? What's the reaction? Where are we in the range? Are we failing at the top of that range? Could this be our turning point? Is everything as it should be? Then just follow the trend. That type of stuff I think is much more nimble and humble than thinking that someone has a defined code about how things are
I
delivering,
agree.
right?
Like ICT doesn't really have the key to the market, the ghost or whatever he says. You know what I'm saying? It's more there's factors at play, and the global markets are so interconnected. Conflict in the Middle East may cause oil to come down if that conflict doesn't really turn into something, and then oil actually goes
Absolutely.
down, right? So then, but
Yeah.
then Russia cuts production at the same time as the conflict goes up. So now there's so many variables. Like
Mhm.
at a minimum, it's arguable that the markets are not able to be manipulated like that. They're just too big, too all encompassing, too many components coming into the machine that it's hard to say one person or one thing is controlling it. But there's definitely,
Mhm.
I mean, look at the big banks, right? Like those what the big seven or whatever it is banks that have bought up a lot of the smaller banks and they kind of run the show now. Those guys, they have the best information, right? So I think where a lot of retail maybe is correct, because I agree with your point. Like I've talked to guys like your mentor who are older guys, they never talk about stuff like that. They don't mention stop hunts and liquidity grab and all this. They don't talk like that. But I think that the information at a hedge fund or at a bank does beat retail. So when you talk about macro, you've mentioned it a lot. Give us an idea of like what you like to look for, even within your own trading in the macro. Dollar
Mhm.
up, euro here, pound here. Like what type of a play do you, because the macro can be very intimidating. That word in
Yeah.
itself just seems very big and vague to a lot of
Yeah.
people where they're like, I don't care about that. I'll find a new bear flag and trade the bear flag. So how
Mhm.
would you describe your macro look, your outlook? And then could you also touch on how a new trader could be informed more about the macro in a simpler way?
Yeah, yeah, definitely. I would say same way I am because I'm not an expert in macro. I mean, when I talk about things that I think drive the market, right? Things like policy, things like when I say macro, we could talk about the economic health of a country, right? And then we have consumer sentiment, things, the big picture things. I think of it that way. So, say for example, uh, you've got Trump coming in. Trump has a
Yeah,
number of policies, and the market is expecting certain things from him. So
yeah,
really, it's bullish equities via lower regulation, whatever you want to make it.
yeah.
Um, Bullish bond yields because it's pro growth, and then bullish crypto as we've all seen, and bullish USD because he's tariffing everyone, right?
Yeah.
And so I think if I would start somewhere with someone new, it would be what broadly is the kind of regime we're heading into? We're heading
And is
into a
that,
new
sorry to cut
US.
you off, is that driven by America first?
Yeah, I would say a lot of the time you have smaller narratives, but I think if you want to focus on global macro, stick with the US. I mean, that's that phrase, right? If the US sneezes, the world catches a cold, right? It's like US is the most important economy in the world still, in my opinion. So yeah, you start with the kind of the bigger picture, and I think for newer traders, the most important thing, even if you don't go for the narrative part, you just you forget that because you don't want to read the news or you don't want to know what's going on. Just watch big events and watch how asset classes react to them. So, for example, watch non-farm payrolls and watch how the US indices react, or just the S&P futures. So, non-farm payroll, expectations, actual, what was it? And at the end of the day, what was the market reaction? So, if, say, for example, we're in the Trump narrative and non-farm payroll beats, the S&P rallies, closes higher, maybe even above a range, I'm bullish. I'm looking for long setups. I'm not trying to stand in the way of anyone there. But if we're expecting, higher equities, non-farm payroll beats, market rallies, and at the end of the day, it closes lower, that's me being informed that really headline should be stronger equities, but now price action is actually a fake out essentially, or it's not rallied as much as it should do. I'm not going to be a trend follower in that environment just yet. I'll wait, because say for example my outlook, and no one's outlook really matters anyway because it's so hard to do a forecast. Like my outlook is equities should go higher, even though they're already super high, and that broadly because I think next year we'll have growth. But I will be just watching, what are the important things that are data releases that are coming out? How is an asset reacting? And I mentioned euro dollar earlier. It's the same in France. You know, France is like people are talking about how negative the Europe is at the moment, how little growth there is. It's like the worst narrative ever, right? The euro dollar should be falling off a cliff. And if it fell, it broke a range lower, but it fell on FOMC, on the hawkish cut, right? That's got nothing to do really with internal narratives in
No,
Europe. I mean, it's
no.
just stronger USD Trump play.
Yes.
So if we start pushing higher and everyone else is saying this is the worst narrative ever, for me, that's then bullish, because we're back in the range where the government was falling over. And then we're back in there. I'm like, okay, this is what everyone's talking about and this is how we're reacting, but this is what price is doing. And ultimately, price is king for me. So I think, again, to close my ramble, you know, just watch how asset classes react to major news. It's called, Patrick Reed calls it mapping the reaction function. That would give you a lot of information. You don't need to read a big article about it. Just what is the market saying? After bullish labor market, strong rally, okay, bullish equities, full stop. And then you look for your technical setup on whatever process you have. Yeah, that would be the key for me.
It's a good answer. Very good answer. Why do you think there is that cynicism that equities are overpriced, they have to come down? Is that because people look back and it came down in 2008 and it came down in 2001 in the tech bubble? Is that the
Mhm.
reason? Or do you think the reason is because people are naturally cynical and are naturally anti trend followers when you
Mhm.
really need a massive event to create what happened in the dot-com bubble or the 2008? So, what's your opinion on that? Like, is equity really overvalued or is it only overvalued based on perception? It's very complicated, isn't it?
Um, to give a simple answer on those specific people, and I was one of them, they missed the trade. They missed long
Me too.
equities.
Me
And
too. Yes,
yeah,
you can't
and
miss
so
that.
they,
If you're young, if you're under 40, you need to not miss that trade. You can miss that trade when
yeah,
you're 60. Like it's fine. Be an old
yeah,
man and be
true.
cynical. But I totally agree with you saying that. 100%.
Yeah, and that's why a lot of people, I mean, I feel like when you miss a trade like that and equities rip, you feel like the only thing I can do now is short equities. When that, because I mean, it can't, obviously, it's just ripped, I missed it. It can't go any higher, kind of have some mean reversion and it continues higher, right? So I think there's a little bit of that in there. But also, you know, people just want to be a little bit against consensus. And I think if there's one thing, well, you've spoken to Jason Shapiro as well. It's like, I think you haven't have spoken to him, have you? Or have you had
I
him on your
have. He's not
show?
on my show. I have not had him on my show, but
Oh,
I was on an event with him for Boris Schlossberg and those guys.
oh, perfect. So yeah, so you know his thing on positioning. It's like
Yeah.
price theoretically can go as far as it likes. I mean, yes, everyone can be bullish equities, but we can have great growth next year and equities will go up. It's only until we start to see, or in my opinion, it's only until we start to see events where equities should rally and they don't. Equities that are events that
Mm,
are pro equities, when they stop rallying, for me, that's a caution sign. I don't like Jason Shapiro might say that's a positioning thing, maybe. I don't know what it is. I just know, if we have a strong labor market, why the fuck is the S&P closing lower on the day? that, I don't need to know all the answers in that, but that's where I'd get nervous. Um, but yeah, but I mean, if I could say one thing about equities, if you have a bias short equities, try and shake it off because it's really hard. It's a hard game to play short equities. People that do it, yes, if you have a process that tells you to get short equities, fine, but it's really hard. And worst thing that can happen, which happened to me, is you short equities, make a bit of money initially, and then you just you think you can then short equities continuously, when in reality, more people are being born, there's more money in the account pumping into the economy. Equities tend to drift up. So when you're trying to play counter that, yeah, you're fighting a hard game. You can win, but it's just a hard game to fight, I think.
It's a hard game to fight. It's good advice. That advice, I think, like the way you described it, it is a common path into markets for people. We come in, markets go up. Your dad told you to buy stocks years ago and hold on to it. But you come in and you look for the top and you want to sell it all the way back to zero. Like that wanting of that
Mm.
drives people to be bearish, I think, often. But then trade long enough, you'll look back and go, wow, the whole year I didn't beat the S&P. I didn't do nothing. Well,
Yeah, true.
I would have been
Yeah,
better off just buying SPY and shutting up. It's up 30%
yeah,
this year or whatever it is. You
yeah,
go through that and then you review it and you study it and you go, oh, I fucked up. Did
mm,
not need to be short there. Yes, it was at an all time high, but it gets what? It makes way more all time highs than all time lows. So that's
yeah,
not the reason to just be bearish. And you have to go through that, I think. I don't think you're right. You should tell somebody, shake it off and come on, get on the right side of this trade. They ain't going to do it. They're going to think that they're going
yeah.
to, yeah, and you know what makes
Very
it
true.
worse? Back to social media you go on Twitter and stuff, and it makes people think the end of the world's happening. Drones in New Jersey, drones here, alien invasion, Trump's the devil. So of course I'm cynical. Look, on Twitter they said there's a nuclear bomb attack coming. Of course I'm going to shoot. So it's like it spirals, it spills on top of
Mm,
itself, and all of a sudden you become this negatively almost like a negatively charged person, right? Like your vibration is negative versus optimism and promise of the future. And no, Trump's going to fix inflation. Trump's going to make it easy for economy to flourish. Trump's going to put more tariffs in place, but it's going to make everybody better. Blah, blah, blah. Like you can have optimism or you can have pessimism, right?
mm,
Skeptical, cynical, whatever word you'd like to use. I think you
yeah.
come in sometimes cynical, but you only stay if you become optimistic.
Very true. And you made such a great point there. You know, and someone, I think my mentor said this to me, when it comes to the macro, you say it's hard to approach, it's fluffy, there's so much going on. Like I could probably write a bullish and bearish macro case for you that's the same length, and you could be equally convinced on both sides. There's so much opinion,
Absolutely.
and that's where I got lost for so long. And what brought me back to earth was price itself. All that matters is price. Now, again, we're not trading, US CPI. You're trading the S&P, or you're trading your dollar, or you're trading whatever.
Exactly.
That's the most important thing at the end of the day. And if you miss it, then you're wrong. It's not that you're eventually right. It's like you're wrong, and just accept it, move on, find the next, high risk reward trade to get into, and then go again, right?
Absolutely. So now when you're talking to people out at the pub or whatever, and they know that you got the podcast and they see you trade and they know you got the experience at the bank and the Fed. What do you tell someone that's interested to not maybe get into day trading specifically, but just trading in general, like investing in general? What would be your number one piece of advice?
Ali, it's all about, you know, your head and your process, I would say. You know, if you have psychological things, or whatever, call them head issues, if you have self-sabotage, it's all going to come out in your trading. I could give you the best process in the world, and you're just going to fumble, or you're going to find a way to lose money with it. So I think it would be, yeah, driving home I guess, just the need to find your own process and to manage those psychological issues along the way, risking very small amount of capital. So, I mean, I talk about a soft launch sometimes, when maybe if you have backtesting software or whatever, you can use this too. But um, really just knowing this is hard, you're going to make mistakes. There is stuff that works, trend following works, mean reversion works, VWAP works. There are core components that work, and they've been proven by successful traders. That's what you need to start understanding, building your own setups and your own process, back testing it so you know when you're wrong, it's not the end of the world, that you're going to be wrong 60% of the time. And then again, that capital to just keep it small because, it's hard. Any other vocation, you're going to have a hard time learning it. What do they
So
call it? What's the learning process called?
mastery,
Yeah, just kind of anything you try new, there's a ramp up period where you make a load of
learning
mistakes. So
curve.
I think exactly, yeah, exactly, learning curve.
Yeah. Yeah.
So yeah, that's what I would say. And the second thing, because my uncle asked me, funny enough, on Christmas Day, he said, "Oh, so what stock should I buy then?" And I don't trade individual stocks, right? But he's classic. This is literally like 3 days ago, um, and how can I make 100%? And my only answer was, you can't control what you're going to make. You can control how much you lose. So, first of all, if you start brand new, you're going to probably lose most of your money. So either keep it small but what you can control is your risk target. So if your risk target is 20%, that's your risk target. That's how much that will, that will cap kind of what you can make. So if you want to risk more in the beginning, that I don't think is a good idea. Eventually, if you want to risk more, just increase your risk. Or if you want to earn more or have a higher return, control the risk side of it. Risk 25% of your capital, you'll make more, because you're risking more capital. Risk 30%, you'll make more. Jason Shapiro talked about that in his or my interview with him. He was saying, I think it's 12% risk target he has. And so he returns something like 30%. It's like very impressive. But if you gave him a 20% risk target, he would then return even more. Why? Because he's got a successful process that has a risk to reward. So it's kind of like input, output.
Like a
If you give
machine.
him more
Yeah.
risk, exactly. Yeah. And that's where you want to get to. It's
Yeah.
like something that has solid blocks, ideas, management, risk or trade management, risk management, etc. And then you have that line and then control the control the controllables,
And
for lack
that's
of a
it.
cringy, a
No, that's
cringy
it.
kind of point.
I love that.
Yeah.
Love that, bro. Great answer. Really. I think we could keep going, bro. You and I, we do really well together. But I think for today, I got a bunch of good notes. Let's put a pin in it. Where do we want to send
Awesome.
everybody to connect with you?
I think probably just send them to the YouTube channel. So
That's what
it's
I was thinking. So everybody go
yeah.
subscribe. We'll make sure it's linked down below. You can actually watch my interview with Colm. He had me on a couple of weeks ago, so definitely check that out if you want to hear more of us. But what we
Mhm.
always ask, guys, for these really good interviews, I want you to go to YouTube for me. Put any questions you have in the comments. We'll review those questions before we do part two. And that way we can really make sure if there's any specifics you want to hear more about, we dive deep on those. If we want to even do a screen share and do a little charting, we can do that. But let us know in the comments. We really do appreciate that from our listeners. Colm, thank you, bro. This has been great. I appreciate you being flexible with me from sick before Christmas and now doing this, 2 days after Christmas. So thank you, buddy. I'm glad we got to get this done.
No, it's a real privilege to be here. So I really appreciate you having me on.
Dude, of course. Of course. All right, everybody. Thank you so much for listening. Colm, have a great rest of your weekend, buddy. Happy New Year to you. Listeners, have a great New Year. It's probably, yeah, it's going to be New Year's. You're actually going to be listening to this on my birthday, everybody. So happy New Year.
Mhm.
Happy January. Let's have a great 2025. Make sure you guys are subscribed, and we'll see you in the next episode.